All right. Back in the action once again. Time to get back to work, guys and gals. It's Monday evening. It is November 25th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, great to have you with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to help you guys and gals find the best levels of support and resistance for tomorrow, the best entry and exit setups for tomorrow, and most importantly, my job tonight is to help you guys avoid those common traps waiting for you tomorrow. That's Tuesday's trading session. And of course, we have a lot to cover here tonight in this video. We're gonna grab some charts here tonight. We get some oil, some S&P, some Nasdaq, and I get some gold all loaded up. And of course, we'll grab the calendar. Got a holiday coming up later on this week. We're not quite ready for Turkey Day yet. We get 2 big days before we run into the holiday. So I want to make sure you guys are ready for the most important times. Be paying attention to on that. I'm going to jump in first tonight, though, on the charts, though, first. I'm going to grab some oil, that black gold, that Texas tea. Boy, oil's all chopped up. It looks like a mess right on that chart right now. But I'll tell you, it's a range-bound market on oil. I love ranges, and one of my favorite patterns is popping up right now on oil. Let's grab a look here on the crude oil. Grab that chart. Let's get this newsletter going here tonight. And again, it ain't Turkey Day just yet, right? But I can definitely get excited about it for us here on this newsletter. So what are we dealing with here tonight? Looking at the oil here first. As you can see on the oil, we have, of course, a big move up in last week's session, a big move down right here, of course, from Friday. And it really looks like right now we're going sideways right now, right? You can see big double tops, double bottoms, flat moving average. So I've got this as a neutral momentum right now, right? You get the bulls with that big move up. They're waiting down here to be a buyer, right? I've also got these bears coming down off the high. They're waiting up top to be a seller. So maybe a little bit of a bullish bias to it, a little bit of a bull bias, but very neutral right now here on the oil. And because you can see we get a range here, right? That big range right in the middle as we bounce around back and forth here. I want to buy low. I want to sell high. I think you're going to have buyers waiting underneath because of that big move up. I think you're going to have a bunch of sellers waiting up overhead because of that move down. And I want to buy low and sell high on this market tomorrow. And I'll tell you, I love expanding triangles. Expanding triangles are some of the best areas for buying and selling in a range-bound market. And you can see I got some great levels I'm watching overhead and underneath right now. So in tonight's video, I'm going to talk about these specific entry setups I'm looking for to buy low right now, the specific patterns I want to see to sell high, and then how about a breakout? You know, breakouts are interesting because if we break out to the downside, we get a lot of space before we go down to that 60 area. But if we break out to the upside, though, we're running right into those recent highs, and that's going to be tricky to be a buyer on this. So we always have our eyes open for breakouts, but we'll have to put a plan together tonight on this video talking about the best way to trade those breakouts, okay? So make sure you stay tuned on that. We're going to talk more about buying low, selling high, and of course, how to qualify those breakouts for tomorrow. How about some S&P? You know, the S&P, I think, is pretty easy on this one. What do you think? I would say we're a little bit bullish right now, just a little bit bullish, right? News came out overnight. The ongoing soap opera, right? The saga continues, the U.S. trade and, the U.S. and China trade deals. Supposedly there's a phase 1 deal in the makings right now. We've heard this before. This is not the first time we've heard this headline. So, I'll be cautiously optimistic. I'm always kind of a perma-optimist personally, but we're optimistic they're going to get this trade deal done. But I think I speak for a lot of traders right now, right? I'll believe it when I see it. But bottom line is we definitely know this market is bullish. There's no doubt about that. That gap up, of course, kicking this thing off here. And it really just never looked back until it went all the way up to the all-time high. So fresh all-time highs up here. And I'll tell you, anytime I'm up around the all-time highs, I always know markets get nervous, right? Markets tend to get really nervous around all-time highs, all-time lows. We don't see all-time lows very often, obviously, but all-time highs. Anytime we start to push those all-time highs, markets tend to get nervous up there. People don't want to buy high. They also don't want to miss out on any more movements. They don't want to take themselves out. So we do anticipate a potential range up here. And if I can get a range up here, I'd love to be a buyer on a nice deep pullback, which reminds me, really what we know right now is this spike in channel, right? Spike and channel patterns are really, really powerful because they tell us to look for entries at the base of that channel. So I really like the idea of buying a nice pullback right now in the S&P. We're obviously bullish, but I think we're a little bit too high to be buying right now. If you're waiting this late to be buying this market, you've missed the easy money on the way higher here right now. I would imagine a lot of buyers are waiting down at support levels like that high at 21 and a quarter, support levels like the low of this hidden channel that I have drawn in. So I'd like to see a pullback on this. Now, sometimes these pullbacks can be really shallow and sometimes they can be pretty strong. What if we get a shallow pullback, but be a very different setup to be a buyer than if we get a really deep pullback? So I think that's kind of the big thing here for tonight is we know we're bullish. Most of you probably already know we want to buy a pullback. The question is, do we get a relatively shallow pullback or do I get a real deep pullback? And no, I'm not going to pay too much attention to that gap right now. That gap is irrelevant until these bears can take control. So what would a bear market look like? At what point does a pullback become a reversal back to fill that gap? When can I sell this thing? We'll talk about that tonight, okay? So we'll definitely cover, if you're worried, what if they come back to fill that gap? I will talk about tonight, right, how we're going to trade that move back down to that gap. But make no mistake right now, though, it's a bull market. I want to be a buyer, and I'd like to buy down inside this battle zone. But again, we might only get a small little pullback. It might be a much deeper pullback. So we'll talk about the specifics on the pullback, and of course, how we can be a seller on this, right? We'll go into all the details on the S&P tonight. Over on the Nasdaq's pretty darn similar to the S&P. We had, of course, that big gap up. All of this coming out of the Asian session with that headline, right, regarding the phase one trade deal, again, whatever that means. And so we know the market's definitely bullish. I think it's pretty obvious here. But you'll notice here in the Nasdaq, there's one thing that really never happened today. We never got any traps, right? We never pulled back below any prior swings. There were no traps. There were no deep pullbacks. What does that tell me? That tells me any conservative buyers, they're still waiting in the sidelines right now. A lot of traders are waiting right now to get their piece of this pie. They're not going to chase after it. These are disciplined traders, right? They've been around the block long enough. Now, again, when we get up around these all-time highs, the markets tend to get a bit squirrely up here, right? They tend to go sideways around here. So we'll definitely want to be prepared for a trading range. I'll talk about the best way to trade a range scenario up here. That is what I would assume we're going to get for tomorrow, but we'll talk about more details on that. And then again, right, do we get a shallow pullback down into my battle zone? Do we get a real deep pullback, down into that, reversal line you can see down here? We know we're bullish. We know we want to buy off support. The question is, which level of support are we going to use? And depending on how deep that market pulls back, what's the best entry pattern? Because we're not just gonna, if the market tumbles, I'm not just gonna try to buy as it's right. That's suicide. We want to wait for the proper entry setup. And again, I'll also talk about how a pullback turns into a reversal and how to capitalize on it, right? How to avoid some of those common traps when you're trying to predict a reversal. You don't want to try predicting a reversal. We'll talk about how to trade the reversal once we get it. And then last but not least here, over on the yellow metal, over on the gold. Gold's, I think we're pretty clear on this one, right? We're pretty bullish on the gold right now. Now, gold, as you recall, had that big move down, right, around the holiday earlier this month. around the Veterans Day holiday. And so the bears are still trying to get this retest of that low. So we know where these bears are trying to go right now. They're trying to get back down to that 46.2. We've obviously got a level of, we're obviously bearish, right? I don't think there's any doubt about that. Lower lows, lower highs, lower lows, lower highs. No doubt about that, we're bearish. In a bear market, what do? We sell. Where? At resistance, right? Want to sell at resistance. So where might we find some levels of resistance? We've got a buffet of resistance here right now. I've got a resistance trend line here. I have a prior swing at the 62.5. I get this gorgeous resistance trend line coming in overhead. And then I've got this little hidden channel I've drawn in too. You can see that kind of puts us all in this little triangle area up here, which of course I've got labeled as my battle zone. So we know we're bearish right now. There's no doubt about that. I just don't want to sell too low because I can easily see it looks like we're kind of sitting right on that major low right there, right? So probably not a good spot to be selling. Probably not a good market to be buying right now either. It feels like the writing's on the wall here for the gold. So really what I want to do is I don't want to sell down here. I want to sell up inside these areas here. And really there are two specific scenarios I'm watching for as we get that pullback. I'm also very much aware this market may continue going lower. Gold loves wedges. One of the things you'll notice about a market like gold is gold loves these wedges. So we'll talk about, if the market goes lower here and kind of the best way to trade it so we're not chasing it as it goes lower. So we'll talk about the good, the bad, and the ugly here on the gold. I do want to be a seller, but I'm also going to keep an eye, what if this double bottoms here, then becomes a range? How do we trade that, right? So we'll talk about a lot of the different scenarios. That way you've got yourself all ready for tomorrow's trading session, right? Be a great video for you guys here tonight. So we're ready to go. I got the gold, the Nasdaq, the S&P, and the crude oil. Before we jump into the charts though tonight, I just want to make sure to remind you to join our mailing list because you may not be aware of this, but just before I published this video on our YouTube channel, I sent out an email to everybody on our mailing list. That way, when you get that email, you'll know when our nightly newsletter goes live. So I would encourage you, if you love the newsletter, if you want to get prepped up every day here with me, we do this every evening, Monday through Thursday, before 8 o'clock Eastern time. And to join the list, it's very easy. All you need is your name, your email address. Hit that subscribe now button. And don't forget, when you subscribe to join the mailing list, your job isn't over yet. You still got to go in and check your email inbox because I'm going to send you a welcome email. And sometimes that welcome email gets stuck in your spam folder. So just be aware of that. If you don't see the welcome email in there, right, check your spam folder. And it's really important to find that welcome email because there's a verification link inside that welcome email along with a bunch of free resources for you that I know you'll really value. So definitely, right, join our mailing list, hit that subscribe now button, and check your email inbox because I'm going to send you a welcome email. And then how about questions here this afternoon? If you have any questions about anything we talk about in tonight's video, right, whether it be strategy questions, psychology questions, indicator questions, whatever the case may be, right, definitely feel free to drop those questions in the comment section below. And speaking about the comment section down there, while you're down there posting those questions, if you tune in every evening on this video, do me a huge favor, hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button, YouTube helps to expose this video to more traders. And I know a lot of traders out there are struggling, and I want to share this message with as many people as possible. So again, post those questions in the comment section below if you got them. But whatever you do though, make sure you hit that thumbs up button there to help me expose this video. I always appreciate you guys tuning in and helping support this channel every evening. And don't forget, if you have questions that are a little too much for the comment section, or if you just love to talk to us here at School of Trade, please feel free, call that toll-free phone number. Don't be shy, right? We're a great group here in Los Angeles, our corporate headquarters here in LA. We're a small family-run business, no call centers, right? No automated systems. We're old school. When you call that phone number, we actually definitely answer the call, answer all your questions, and we love hearing from you. So call that toll-free phone number if you have any questions. And again, right, hit that thumbs up button, drop those questions in the comment section below. And let's get this party rolling here tonight, shall we? Let's jump into our calendar here for tomorrow. There's a big open space there on Thursday, which means it must be about that time of the month here, going into a holiday week. Now, just so you know, for the newsletter this week, I'll be here, obviously tonight's Monday. Tomorrow night, I'll have our newsletter for Wednesday, but I won't be sending out a newsletter on Wednesday evening. So unfortunately, I always hate leaving you guys hanging, but unfortunately, just Monday and Tuesday night for the newsletter this week. Wednesday's newsletter would obviously go into a black hole, right, of Thursday's trading session. And just so you know, right, tomorrow really is the last full trading day of the week, because Wednesday is pretty much a travel day for most people, right? Boy, I heard the airports this year in the U.S. were going to be nasty because of all those Boeing 747 Maxes, right? Those are out of commission right now because nobody wants to fly on them. Supposedly, it can be nasty at the airports here this weekend. Luckily, I'm not flying anywhere. I'll be just driving on the highways here. But if you are flying, make sure you call ahead. Make sure you plan ahead, and you might want to bring a pillow with you because I'm sure there will be some delays in some of those airports. So if you're flying over the holiday, be safe out there, right? Use your head, plan ahead. But just so you know, though, tomorrow is the last full day of trading. Wednesday will be a half day. So Wednesday will probably be, probably a half day, probably just the morning session on Wednesday. And then, of course, Thursday, right, get the day off. The markets are closed on Thursday. And then you've got an early close on Friday. So if you plan on trading on Friday's always going to be a hit or miss after Thanksgiving. We usually get a little bit of good volume on that Friday morning. It's mostly just the institutional traders that have no other choice, but they have to go out and put trades on for their clients. For most of us, we'll be tuning in to watch people make fools of themselves on the Black Friday sales, right, at Best Buy, but maybe that's just me. But Thursday and Friday, be very careful. Markets are closed on Thursday. They are open on Friday for a half day, but be very careful on Friday morning if you try trading on Friday morning. I would much rather have you spend a little more time, right, with your great aunt and your grandma on Friday before the end of the holiday. We only get so much time with all of our friends and family, right, every year, so better spend it wisely. So we know the basic layout for this week. Tomorrow's a big day, right? Tomorrow's a big day. Wednesday's a big half day. As we look at tomorrow's trading session, you can see there's some big news tomorrow. We get the international trade number at 8:30 and then new home sales at 10 o'clock Eastern time. Now, not that I don't think international trade is important, but I don't think that's going to be our big mover for tomorrow. I would assume that new home sales number at 10 o'clock Eastern time is going to be the big meat and potatoes here for tomorrow's market moving events. I also saw a question come in earlier on the YouTube channel about Jerome Powell. Jerome Powell is speaking tonight. I should mention that. This is not a testimony. He's a keynote speaker at some conference. I can't recall where exactly it is. I don't think the markets will have much to say about what he says. He's pretty much already told us they're not changing rates until next year. So I don't expect him to really have any impact on the markets. People will be listening. If you happen to be hanging around your computer tonight at 7:30 Eastern time, you might want to keep an eye out for some setups right as we go into the Asian session, but I wouldn't hold your breath on that. Tomorrow though, international trade at 8:30, new home sales at 10, again with the emphasis being on that new home sales number at 10 o'clock Eastern time. And don't forget guys, we're going to put together our plan tonight, and then we'll be back tomorrow morning 8 o'clock Eastern time, Monday through Friday. And again, this week it'll be Monday, Tuesday, Wednesday. I'm not trading on Thursday, and of course Friday, right, we'll be off with family on Friday. So Monday, Tuesday, Wednesday this week in our trade room. Only going to have newsletters on Monday and Tuesday evenings this week as we go into the holiday. All right, you guys know where to ask questions if you have any questions. In the meantime, let's get this party rolling here. We got some oil, some S&P, some Nasdaq, and of course, some gold. Let's grab a look at the oil here first. Let's dig in here on the oil. The most important thing that you need to be aware of is this market is a range. And anytime we have a range-bound market, we know the market is balanced And basically, there's a big magnet right inside the middle of that range. So what goes up will come back down. What goes down will come right back up. Now, whenever I have a range environment, I always try to find some sort of bias, right? Some sort of directional clue for it. And you'll notice that there's that bear move down before the range, which tells me that sellers are probably going to be waiting above the high of that range to sell it back down. But at the same time, you could also make an argument and say, well, wait a second, this is a big, strong move up. These buyers are just trying to buy low. They're trying to go back up to retest the high. So I would believe you're going to see buyers waiting underneath it. And that's why I have this listed as a neutral market right now, because I do think you're going to see both the buy side and the sell side participating, right, with this market here for tomorrow and what might be the rest of the week if we don't see a breakout on that weekly inventory report, right, later on this week here. Now, the most important thing about a range is buy low, sell high, and avoid the middle. Range-bound markets are balanced. As it goes up, I want to sell. As it goes down, I want to buy. And the best way to do that is to use what I call a failure pattern. And the failure patterns are pretty simple, right? I want to get below the range. And what will usually happen is the moving average will follow, and sellers in this case, right, with mark going lower, sellers will try to come in and sell a pullback off the moving average. When they try to sell that pullback, we know it's a range, right? So we know the magnet will probably drag price back up into that trading range. Right? Same thing goes as we go higher. As we go higher, I want to get up above the range. It's a range market, so we're not trying to buy this. But what I will do, though, is I'll wait for those buyers to try to buy a pullback. You know, again, it's not a trending market. We're not buying pullbacks or selling retracements. It's a range market. And again, there's a magnet right back in the middle. So when I see buyers now try to buy a pullback on this, that's not a very reliable trade in these market conditions. And so because of that, I'll basically look to trade right back into those stop losses, right? Simple as that. So in a range market, buy low, sell high, and avoid the middle. Now again, you'll notice here I've got some key levels of support. I've marked up some support levels below. I've got some resistance levels above. I also took that trend line off that low and I copied it up there. That will be an interesting spot there to keep our eyes on there as well. You'll also notice the size of that range has determined the size of the sell zone and the buy zone below. You'll learn all of these details in our trading classes here at School of Trade. So that's where our levels of support and resistance go. So again, really what I'm trying to do is I want to see this market come back into that range, try to go lower, get me into some of these, right? Get me down into, at the very least, get me down into this 35, down to 80 area. You know, get me down below that range. Then what I can do is wait for those sellers, those breakout sellers, to try to sell that pullback. And once they do, we know exactly where their stops are, right? We know exactly where their pain points are, and once those stops get triggered, we can be a buyer into stops, and as long as we're not buying inside the range, I can be a buyer on that pullback. This is what I call a failure into pullback combination. So again, it's a range. I want to buy low underneath that range. My favorite setups underneath that range are those failure into pullback, right, combinations. Now, as we go higher here, let's just say, for example, we end up back in the range. We try to go higher again. We go up into an area of resistance overhead. The moving average will come over, and I'm banking on the fact that buyers are going to think this is a breakout. They're going to try to buy that pullback, and once they do, we know exactly where their pain is now, and we're looking to sell it back down into that trading range. Now, what if the market sits inside the range? Yeah, you got to sit on those hands, okay? If the market sits inside the range, we're going to sit on those, right, on those hands and make sure we don't do anything inside that trading range. And then what a breakout look like? What's a breakout look like? Well, breakout patterns are really tough to predict. As you can see, there's been a lot of times here, just the last couple days here, where we've had some really strong breakouts, either above or below, and as you can see, none of them have been successful. So how do we trade a breakout? Is there a secret to it? There really isn't any secret to trading a breakout. The secret is waiting for what I call a 1, 2, 3 breakout. That starts off with a strong breakout, a pullback to the moving average, and then a third, right, break off the moving average. That's the key. It's no secret, no magic, no smoke and mirrors, no special indicators. Range-bound markets are balanced markets, folks. So if we're going to try to buy a breakout or sell a breakout, we're really playing with fire. We're not in a very high odds environment trying to trade breakouts. So what I'll do is I'll wait for that 1, 2, 3, wait for that pop going higher, and then what I do is I mark up that high, I mark up a new trend line off the high, then I find what I call a hidden channel. And where these two line up is really the sweet spot, right? It's that original high, the low of that channel, and this is where I like to look for. And what I call this a 1, 2, 3 breakout into a hidden channel pullback, right? Hidden channel pullback. Where's my target? My target is up overhead, right? Up at that 58.74. And the same thing to the downside, okay? If we go lower, strong move down, again, I can't trust this as a breakout, right? I can't trust that as a breakout because a lot of times it'll fail off that moving average and run right back up into that trading range. But if they can hold it and run this thing lower on some strength, then I can trust it. I can mark up that low, find that hidden channel now. And again, right, we're looking for that confluence, ideally, that original low to the high of that new hidden channel. That's where you get the magic. That's where you get a really nice, right, breakout pullback to trade with. The buyers want to go back up to retest that 74. Where are my sellers trying to go? The sellers are trying to go down to that 59, but I'll tell you, there's a lot more open space below us here on oil, down to 55 if they can really get this thing going here. It doesn't look like that'll be the case here for tomorrow, but hey, I mean, I wouldn't be surprised if we did see it. This is oil we're talking about here, right? Little whisper out of OPEC here may have markets either running higher, right, or tumbling lower. So now we know, again, most important thing here on oil, it's a range market. Buy low, sell high, and focus on those failure patterns, right? Now, speaking of failure patterns, I have a lot of great detail about failure patterns inside of our free trading classes. So what I would recommend is, especially if you're a new trader out there, I would highly recommend you grab that link in the upper right-hand corner and join our free trading course. The free trading course, don't let the name, the word free, mislead you. I give away more for free on this newsletter than most people charge thousands of dollars for. So my free trading class is really going to help simplify and really make sure you understand how my strategy works, my 4 favorite entry setups. You'll see hundreds, if not more, examples of failure patterns as we've talked about here tonight. So make sure you grab that free course. It's linked up in the upper right-hand corner. And again, if you're on the blog right now at sidewaysmarkets.com, I'll put a big red button for you to register for that free course just below the video tonight. So feel free, if you're on YouTube, I'll put all the links in the description of YouTube, or if you're on the blog here, just scroll right down and you're good to go there. So oil looks really, really good here, right, for a possible breakout right now. Or for that range-bound market. Let's talk about, speaking of breakouts, let's talk about a breakout. How about some S&P here now? The S&P, as you can see, is a very bull market right now. The one thing we didn't see today is a very deep pullback. We got a little tiny trap, right? Little tiny trap there on the S&P, but other than that though, we didn't see really any pullbacks. You'll notice here the market spent most of its day kind of grinding higher, right? And again, I would imagine a lot of buyers in this market really never got what they really wanted out of this today. Unless you just bought it, right? Unless you just bought high as the market was pushing higher. That was the only way to really trade it here. There was that late morning pullback, but that pullback was pretty late, right, in the session there this morning. It's late as far as, very close to that all-time high. So that we really haven't seen a real good juicy bite out of this apple yet for these bulls. So we know there are probably going to be buyers waiting here. The most important thing I want you to keep in mind, it's a trending market with a very strong move in one direction. And anytime we have a trending market with a strong move in one direction, we know the odds are very, very high that we pull back and retest the high at some point tomorrow. The odds are very, very high anytime. And again, the most important thing about this chart, it's a trend, but it's not just any trend. You know, there are lots of lazy trends like you'll see on gold in a few moments here. This is a very strong trend. And strong trends like that, they oftentimes make it difficult for conservative traders to get in, which means conservative traders are still waiting. You know, the traders who like to risk small to earn large, like me, right? They're still waiting for that deep pullback. The most important thing, though, is with this much momentum, it's tough to believe that anything that pulls back right now won't be seen as a buying opportunity, right? Especially with all this, you know, hugs and kisses back and forth to the U.S. and China right now about this trade deal, right? It does seem like this would be foolish to really think anything besides buy the dip on this market. So we know we want to be a buyer. Where do we want to buy at? We want to buy at support. And what I've done is try to find a level. Now keep in mind, you know, how do you find the best levels of support and resistance? In my experience, the best levels of support and resistance are areas where you can risk small to earn large. For example, if I can get a really nice deep pullback down to this, what I'm calling kind of a hidden channel down here, if I can get a really deep pullback down there, I can take a relatively small amount of risk for a much bigger amount of reward. That's what makes a good level of support and resistance, right? I mean, you could argue that this support level right here, that trend line is almost a waste of energy, right? Don't even worry about it. Because who's going to look at that and say, oh, I can't wait to sink my teeth into this trade, right? No, there's very little reward. There's very little potential reward in that. Yeah, I know. The market could keep going higher, but we don't know that yet. Right? I want to build in some good risk reward on this, and to do that, I need to get a deep pullback. So one of my kind of secrets that I always tell my clients is, you know, be picky about what levels of support, in this case support, right? But be picky about support and resistance. Think about how can I find a level of support that allows me to take a small amount of risk for a big amount of reward and wait for it. Make the market come to you. You know, one mistake that I made a lot when I was a rookie was I was trying to trade everything all day, everything. I was trying to be in every move. And the reality is you're gonna pay a bunch of commissions. You're gonna lose a bunch of money that way. Most important thing is find a level of support that you know you can get a good small risk, good reward, and wait for it. And that's exactly what my plan is for tomorrow. So again, I've got my highs marked up. I'm marking that low here, and that really, in my opinion, is kind of the cat's pajamas, right, when it comes to level of support there for tomorrow. So we have that as a level of support. I've also got this big move up, this pull back. That's going to be a key level of support. You'll notice I haven't talked at all about the gap yet. The gap, in my opinion, is irrelevant at this point. I'm not going to sell this market, okay? I'm not going to sell it just because there's a gap down there. I will sell it once we get a reversal, but we're definitely not there just yet. So we know we've got that hidden channel. I know I've got this small channel. This is a spike in channel, by the way. Spike up into a channel going higher here. Typically, spike in channels will pull back right into the base of that channel. So I want to be ready for that shallow pullback because I do think there will be a scalp opportunity on that, but I also want to be aware of what if we really get that right a lot deeper pullback here. There really could be three different things to keep an eye on, right? So for example, you know, if we get a relatively shallow pullback, you know, down around that 26 3/4 area, the big problem we have at that point is there simply isn't a lot of built-in profit, right? So if I pull back on this, let's get this right. If I pull back on this, the problem is I really don't have a good, you know, again, a good risk reward opportunity here. So I've got to go create one. right? I've got to find a way to engineer the entry setup so I'm not risking large to earn small. And one of the keys to this, one of the secrets is whenever you know you've got a level of resistance that you're worried about overhead, look for a trap entry. Traps are always my go-to entry pattern. So in this case, the problem isn't the deep pullback. The problem is it's a very shallow pullback. With a shallow pullback, I worry about buying too high. And when I worry about buying too high, I like to look for, right, a nested failure with a trap entry long. This is a little bit more advanced of a pattern, right? But you guys can handle it, right? You guys can handle it. And I want to kind of make sense of it, right? We know there are buyers waiting underneath these lows. The problem, though, is we don't know how many of them are there. For all I know, this will pull back and keep going lower, right? For all I know. And because there isn't a lot of reward built in up here, I need to let these sellers ultimately wrap the rope around their neck before I buy into those stop losses. I'm going to need those sellers to get stuck so I can buy into their exits, because if you're a seller and you get stopped out, you automatically become a buyer. So you'll notice as the market pulls back, let the bears try once. Get a higher high, let them try twice. Look for that trap low. That trap is going to allow you now to structure your risk reward. Now your stop will go right below that low. And so now it's a very small stop for not a huge target, but at least it's bigger than the amount of risk you're going to need. The only other option on that is to put your stop down here and enter up here. And now that risk reward ratio is way out of whack. So in a shallow pullback, right, the best way to trade a shallow pullback is to use a trap. Okay, not because we're worried so much about the sellers, but because we're worried there's not going to be a lot of big open space overhead. Now, if we get a deeper pullback, down to this trend line, this is the easy one, right? This is the easy one. Wait for that moving average to come over. Let those bears sell off the moving average. We got you right where we want you now. Right? At this point now, when I see those bears coming in trying to sell off that moving average, this is not a bear market. It's a bull market. And so any seller who's going to be taking risk on that, they're playing with fire. Now we know where their stops are, and now we look for that failure into pullback combination for that rally now going back up where? Going back up to retest the high. Remember, all we know in this scenario is back to retest the high. Okay? That's what the odds tell us. Strong move up, pull back, retest the high. And then we're using whatever pattern we can get our hands on, right, to basically do that. Now, what if it really tumbles? What if we really, really tumble, right? I got some levels down here. We're watching here. What if it really tumbles? If it really tumbles, it could. All that movement up, that could evaporate, and this thing could end up right back in that area again tomorrow. But is it really time to sell that market? Probably not just yet. But we've got a lot of bearish momentum, don't we? The problem with a big move down like that now is you're probably not going to get many sellers that will give up without a fight. Would you agree? Right? The bears will come in, they'll try once, they'll probably try twice. That's exactly what I'm looking for here. I'm going to look for a slightly more conservative failure pattern. Again, we've talked a lot about these failure patterns so far. You'll notice as we pull back now, again, give these sellers the benefit of the doubt. Let them try once, let them try twice, and then we can be a buyer now as we go into those stop losses running higher. All right, guys? So again, a shallow pullback, our concern is what? We're buying too close to resistance. So we want to use a trap pattern, right? If we get a much deeper pullback, not that deep, right, but a good modest pullback, now we're in the sweet spot now. Now it's failure into pullback and back up. Or if we get crushed, big move down, right? Again, not a reversal yet. Respect the bears. 1, 2, and again, notice how I draw this. 1 try, 2 try, higher highs. Why? Because sellers want to sell high. You want to sell your car for the highest price. You want to sell your home for the highest price. You want to sell, whenever you're a seller, you want to get the highest price for it. That's exactly why you want those bears to try twice with higher highs there, right? Once you see them try twice, then we're buying right into those stop losses. Now, again, how would a reversal look? A reversal would be what? A strong move down, a pullback to the moving average, and a strong move off the moving average. What do we call that again? It's called a 1, 2, 3. In this case, a 1, 2, 3 reversal. We're going to mark up that low. We'll draw a new trend line off those lows, find that hidden channel off the highs. Now we know where our sweet spot is, don't we? And now I can look to sell into that gap. Now that gap becomes a big deal. Okay, gaps aren't big deals until they become one. Right? We don't just try, like we saw back here, right? We saw that big move up, right? In the pre-market, they kept trying to go back to that gap, and all those bears got smoked as the market ran without them. Don't be foolish. Don't try to sell it just because it's a gap waiting underneath. Find a good level of support, a support level that allows you to buy low, risk small, and earn large. And then, as I mentioned earlier, I wouldn't be surprised here at all if we see the market go sideways. We'll talk about this obviously in the Nasdaq as well, because the Nasdaq looks like it might be even more likely for this for tomorrow. But if we do start seeing a sideways range, don't forget, I'm going to take the size of that range, and that will determine now my buy zone, right? So once we know kind of what that range looks like, then we'll know where our buy zone is. And what was my favorite pattern for a range? A failure. What did it look like again? Strong move down. Again, imagine a breakout pullback, right? Moving average comes over. Bears try to sell off the moving average. Those foolish bears, right, trying to sell in a bull market, and we'll look for that failure pattern going back up into that trading range. If the market keeps on running higher, we keep waiting for that deep pullback. All right, if this thing keeps going higher, if it keeps on grinding higher, it easily could. For all I know, it'll keep grinding. If it keeps grinding higher, I'm waiting, right? I'm waiting for that nice sharp move down, catch those counter trend sellers, right, and buy it right back up to retest those highs. So now we've got you covered. The buy side, the sell side, also if this market goes sideways here for tomorrow. Let's move this thing over to the Nasdaq. Nasdaq, again, is very, very similar, right? And again, as I mentioned earlier, I'm going to cover a lot more details about the entire trading strategy that I'm drawing up right now in that free course. So, right, if you're struggling to kind of follow along on the terminology, or if you just want to see a lot of examples of what these patterns really look like on our favorite markets, grab that free course in the upper right-hand corner. The NASDAQ is definitely bullish right now. And just like the S&P, we're right back up at those all-time highs. All-time highs, let's put it this way. You're never going to have the best price action around all-time highs. Most of the time when we get to the all-time highs, we're going to get a little bit nervous up there. Markets will get a bit jittery. Nobody will want to be a buyer up there. At the same time, it's so bullish. I doubt a lot of people will want to take their profit, or at least all their profit off. So because of that, I would expect to see this market going sideways here for tomorrow's trading session. But make no mistake about it, though. What do we know about this market right now? We know it's a very strong move up. And what's the most important thing? Anytime I see a market go this strong in one direction, right, the odds are stacked in our favor for a deep pullback and a retest of that high at some point tomorrow morning. So now what I'm doing is I'm just going out and finding all the levels of support that I can find right now. What I'm doing is I'm drawing off these two highs. That's giving me something I can use here for a hidden channel. I've also got some prior swings I like as well. The one thing that really stands out though on the NASDAQ is how big this space is right there. On the S&P, there isn't that much wiggle room underneath the buy zone. The buy zone's relatively robust on the S&P. The Nasdaq, though, we definitely have that concern that, yeah, we want to get a pullback here into that buy zone, but if we really go lower, though, right, this could really turn bearish quickly here, and we may have to plan for that deep pullback. So a lot of this is the same as the S&P, right? We don't exactly have the short-term trap like we saw on the S&P, but if I can get if I can kind of zoom in on this, if I can get us now to get a pullback to that channel low, I get that moving average coming over. Again, you can see this coming a mile away, right? Strong move down. The bears try to sell off that moving average. We know exactly now where their pain point is. We can buy right into those stop losses. And then if we get lucky, we can grab that pullback pattern. That pullback pattern is always a great kind of add-on after that failure setup. And let's say we don't get that pullback. Another very common scenario is it runs higher. We don't get a very deep pullback. So instead, we have to look for a trap instead, right? Look for a trap pattern instead of that, right? That original pullback. So that'd be another kind of variation to keep in mind there. The failure pattern is pretty darn common. What the variable is, do we get the immediate pullback to the moving average, or do we have to wait for a trap pattern underneath that low? And again, failure patterns, trap patterns, definitely check out that free course I mentioned earlier, right, about the free class here. At the same time, though, what if we really pull back? Right, if we really pull back, again, I've got this big strong move up. I know we're going to probably pull back and retest that high at some point, right? The shallow pullback's pretty easy. It's just a failure, right, into a pullback combination on there. But if we really get, pounded here and this thing really takes off to the downside, well, now the whole thing is now that momentum is going to be an issue here, right? I want to be a buyer, but I also want to respect those bears. And to do that, I'll let them try once, let them try twice. And once we have those bears trying once and trying twice now we know where their pain is. Now we know where their stops are, and we're buying right up into those stop losses, again, for a retest of that high. And a lot of times what happens is this will shoot up with a failure. It'll give a shallow pullback, a higher high, and you'll get that little trap low. This is a great little add-on, and oftentimes it's coming off of like a hidden channel of some sort. You know what I mean? You're kind of using that hidden channel, if you will. Line up those highs down to that low, right? And that's kind of a hidden channel there. So there'd be two, again, a couple different ways to look at it. It's a nested failure because you've got that strong move down, right? So again, it's the straight failure pattern, but then as it goes higher, we mark up those highs, right? And we look for the little trap low because, again, like I mentioned earlier, when I'm worried about buying too high, remember, you got to know where you're trying to go. You're trying to go back to retest the high. The failure pattern is easy because there's a big reward waiting overhead. The pullback pattern ain't so easy. It's not so easy, is it? No, it's you've got to make sure you get that little trap down there because you want to avoid buying into that level of resistance. Now, of course, you might be asking, well, okay, deep pullback, so when does this thing turn bearish? It turns bearish once it holds that pullback. Right? If these bears, if they can hold that pullback and give me a nice jump off the moving average, then great, I'm in. Well, no, not in literally, but I'm okay now to be a seller. Now what I'll do is I'll mark that low, draw that new trend line, find that hidden channel, and now I'm looking to sell. And again, I like to look for that sweet spot. You won't always get it there, but at the very least, though, you want to get that short off the high of that hidden channel. And then where's my target? Obviously, 8,300 is a very desirable target, but I mean, come on. If this thing turns around, we're going to leave at least a portion of that trade open for that 82, 83, that gap up over the weekend. Now, again, don't go trying to call reversals ahead of time just because there's a gap up there. This is way too bullish for this to be a gap, or if this to be a magnet going lower here. Now, like I mentioned earlier, we might not get a deep pullback here. These buyers may stand really firm up here, and so we may see it go sideways. In fact, if I had to guess, I would guess for tomorrow that we see the market go sideways. If that's the case now, take the size of that range, right, and find your buy zones underneath. We'll do that together tomorrow, obviously, in our trade room. But find your buy zones, get underneath the range. Think about that, breakout pullback, right? Think about those sellers taking it lower. They're going to confuse this for a breakout. They'll try to sell off that moving average, and once they do, you've got them right where you want them. And now we can buy right into those stop losses, right? Buy right into those stop losses. What if the market keeps going higher? If it keeps going higher, then not a lot changes, right? If it keeps going higher, we're still struggling around these all-time highs. I'm still going to be looking for that deep pullback to get me in underneath the moving average, get those sellers to try to sell, right? And of course, buy into those stops. Because again, in those environments, I can risk small to earn large, right? That's the key. The key is not taking every single pattern. The key is taking the patterns that line up with a good level of support, a channel, a range line, right? A prior swing high line, right? Some support level, incorporating that support level with a valid pattern, but making sure you can have a nice big reward compared to the risk you have to take for that pattern. The pattern will determine the amount of risk. So for example, right, if I see a failure pattern, if I see the price, come lower here and get a failure pattern right there, there's my risk right there. There's my risk right there. Can I get a reward that's bigger than that? No, not worth my time. There'll always be a winning trade that defies the odds. But we want to focus our energy, right, on taking those patterns that give us that nice small amount of risk for that nice big potential amount of reward, right? Look for those 2-to-1 levels. That's how you find the right levels of support, and then wait for it. I know it's not fun, right? Waiting for this stuff is not fun here, but we're definitely going to play it, right? Play it conservatively, because the conservative setups are the ones that have high winning percentages, risk small to earn large. All right, we're looking good on the Nasdaq. How about some gold? Wrapping up tonight here on the yellow metal. Gold, of course, as you can see, is bearish. As we mentioned in the introduction, we definitely can tell, I think the writing is on the wall right now, and the bears definitely want to go back down and retest that low at 46.2. I think the biggest challenge we have, though, right now is we're kind of sitting right in an area where it's not difficult to think this was a range, right? So it's not difficult to think that buyers might be waiting down here, and this could be a failure going right back up into that range again. So I don't think it's a good spot to be selling just yet, based on what I've seen in the past. When you're down at a level of support, probably not a great place to be selling, right? I'd rather be a seller at a level of resistance, right? So we want to go out. We know we're bearish. I don't think there's any doubt about that. Where can I find a good level of resistance? I'm going to mark up that prior swing. That's going to be a level of resistance. I really like this trend line right here. I really like that trend line right there. I love expanding triangles. Expanding triangles are always my go-to when a market starts to range out, right? So those expanding triangles, selling off the top of those expanding triangles in a range bound market, that's a great spot there. I'm also, of course, lining up these lows, putting it up around these highs, and that will be a good spot for me for tomorrow as well. And then again, I've got that trend line coming down, right? That's a level of resistance. So I don't think there's any doubt we got a lot of resistance here overhead. One thing I'm definitely keeping my eyes on for tomorrow is if we do see this thing bounce off of this low, this might quickly become a range environment. And so we may not get that deep pullback right away. It may go sideways here and then give us, I like failure patterns, right? When it comes to a range. So if we do go sideways here, what you want to do is wait for those buyers to take it higher, wait for that moving average to come out, anticipate that breakout pullback pattern, right? Rookies love those patterns. I used to love them when I was a rookie, right? We go up, the buyers try to buy it, and what happens when they fail? The price comes tumbling back down again. That's the exact same thing we're looking for here on the gold. Let the market go higher. Let them try to buy that pullback, and we'll just simply look to sell this thing right back down into that trading range. Same basic idea as we keep on seeing in this market as it goes up, failure, back down, up, failure, and back down. That's the goal here for tomorrow. So keep an eye out on that trading range. Now, if we just get this pop going higher here, same basic idea. I'm looking for a buyer failure pattern, right, into a seller pullback. For what? For a retest of that low, right? The retest of that low is the short-term target. The longer-term target, obviously, is down at that low at 46.2. So imagine now we bounce higher here. The buyers now think this is a reversal, but they're walking into a lot of areas of resistance. Let's see if we can't get those buyers to try to buy that pullback. And if they do, we know where the pain sets in and we can sell it right back down in. Failure pattern into pullback pattern, and then back down we go from there. That is definitely on my radar here for tomorrow. So again, to keep your eyes out for a range. If we don't get the pullback, keep your eyes on a range. 1 try, 2 try, and back down. And then again, what if we keep going lower here? If we keep going lower, keep your eyes open for a wedge. Okay, and that wedge will probably have us pinned to that 46.2. The key is as the market keeps going lower, we lose more profit potential, right? So as the market goes lower, what's going to happen? Fewer and fewer sellers are going to see value selling down there. Does that make sense? As we get closer to that level of support, what happens? There's not as much reward compared to the risk, right? So if I look for a real shallow pullback here, I've got to take a full risk for not a very big reward. It'd be a much better idea to wait for that pop higher, use some of these levels of resistance we have overhead, and just simply wait for it, right? Yes, sometimes you'll miss some trades, but you'll be in the big ones, right? And at the end of the day, who cares if you miss the small stuff? If at the end of the day, you consistently get into the big moves of the day, your broker will hate you. And in fact, your broker will call you and say, is something wrong over there? You're not trading as much as you used to. In other words, you're not racking up as much commissions, right, for their sports car payment. What you want to remember is when you overtrade, you really do yourself a disservice, because usually when you're super scalp, the only person making money is your broker. But more importantly, it's exhausting. And by the time we get the good setups at a level of resistance that allows us to, right, sell high in this case, take a small risk and a big reward, those are the levels of resistance that you really want to be paying attention to, not the ones that have these really small profit potentials. Right? Not that you can't make money as a hyper scalper, but very few people do it successfully. It's a much more sustainable long-term strategy. Be specific, right? Be patient. Be a sniper, right? Be a sniper, not a cannonball, right? Be a sniper. Look for those, right? Look for those levels that you can easily risk small to earn large. So again, as we go lower, not a lot changes there. And then again, obviously, can we go higher here? What's a reversal look like? Reversals, strong move up. Pull back to the moving average, right? And a strong move off the moving average. I have no problem being a buyer, but you got to show me proof. Mark up that high, mark up that low, find that hidden channel. And again, remember at this point now, all you know are these highs. That's all you know. So mark up those two highs, bring it down to that low, find that hidden channel, and wait for that pullback, right? Wait for that pullback. Now, I'll tell you, if the gold reverses right now and goes higher, we might not get that pullback. So what's one more pattern you could look for? How about a 2-try reversal or 2-try breakout? Strong move up. 1, 2, trap, and go. This is my go-to pattern whenever a market just gets ridiculous, right? Whenever it just gets, you know what I mean? A reversal will be a move up, a pull back to the moving average, and a jump off the moving average. What I'm talking about here, though, is the market goes up and it never pulls back, right? It keeps on going. You know what I mean? In those situations, we're obviously bullish, right? This is not still a bear market, but we just never got the 1, 2, 3 reversal. In these situations, look for this pattern. 1 pullback, higher high, 2 pullback, trap low. Okay, rather than simply chasing after it, I want to buy low. Why? Because when you buy low in a bull market, it allows you to structure the risk profile of that trade. If you buy it as it's going higher, there's no safe place to put your stop, right? And that's why buying high is one of the big dangerous ways to trade. But when you get that trap low, now I know exactly where my stop goes. I can formulate a low risk, high reward trade here, going back up to retest the high. All right, guys, those are two buy setups as we go higher here. One, of course, being that 1, 2, 3 reversal, and the other, right, that's the one I like the most because that's going to give you that nice deep pullback. But again, we may not get it. The market may jump up and keep going. And if that's the case, 1 try, 2 try, trap low. And again, you want that trap because you don't want to be buying high. Boy, we've covered a lot here in this video tonight, as you can see. Again, I would encourage you, especially if you're new here with me in the newsletter, make sure you grab that free course linked up in the upper right-hand corner. If you're on the blog right now at Sideways Markets, right, make sure you grab that big red button below the video tonight here on the trading blog. And of course, as always, guys, right, as always, make sure you come out and join me every morning, Monday through Friday, in our trade room. It's really easy to get registered. We got a bunch of flexible ways to get started. Our advanced course is what you're looking for. The advanced course has the beginner, the intermediate, all the advanced classroom sessions, the daily trade room, all the ongoing support. There's a video right there on the website to walk you through how to get registered. But maybe you're not on the website right now. If you're on YouTube, I'll put all the links in the description of the YouTube video. If you're on the blog at Sideways Markets, just scroll right down. There's a big blue button if you're on the blog right now. And don't forget, you can always call me. Right? Pick up the phone, give me a call in the office. I'll be here for the rest of the day today. I can easily walk you through the entire process, answer all your questions. We get a bunch of flexible payment options going into the holiday season here right now and some very special bonuses. So don't be afraid to call that toll-free phone number. I'll be here all night. Be happy to walk you through getting registered for tomorrow morning's trading session, or use that live support tool. That's also an easy way to get my attention and to get some questions answered as well. But either way, though, get registered for tomorrow morning's trading session. We open up every morning at 8 o'clock Eastern Time, Monday through Friday. If not, make sure you grab that free course. I've talked more about that here tonight, so you know where to find that. And as always, keep in touch, right? I'll be back tomorrow morning with all of our clients in our trade room. Tomorrow night, of course, back here for the next edition of our newsletter. And again, it will be the last newsletter of the week this week. Guys, thanks so much for tuning in tonight. Always appreciate you guys and gals spending your valuable time. Now you can go back to cooking all the stuffing and getting everything ready for dinner later on this week, right? Say hi to Grandma for me. I'll be back here with you guys, same time, same place next time. As always, my name is Joseph. Be well out there, right? Be nice to each other and don't eat all the food before Thanksgiving, okay? And we'll see you guys next time. Adios, amigos. Bye-bye for now.